Welcome back to Crypto X-Ray Labs. I am Agente Sucesso, and today we are going to dismantle one of the biggest myths in crypto trading, the idea that price action is the only thing that matters. If you are waiting for a green candle to confirm a breakout, you are already exit liquidity for the players who understand what I'm about to show you. We are talking about the Stablecoin Supply Shock. This is not just a fancy term, it is the fundamental physics of the crypto market. Think of stablecoins like the fuel in a rocket's tank. You can have the most aerodynamic ship in the world, the best technical chart patterns, the perfect RSI, the most beautiful Fibonacci retracement, but if there is no fuel in the tank, that rocket is staying on the launch pad. Conversely, when the tank is overflowing and the pressure is building, even a minor spark can lead to a vertical move that leaves retail traders scratching their heads. Most people look at Bitcoin's price in a vacuum. They see it go from 60,000 to 65,000 and think, oh, it's bullish. But they fail to ask, where did the money come from? Was it a rotation from altcoins? Or was it fresh capital entering the system via stablecoins like USDT and USDC? The stablecoin supply shock occurs when the ratio of Bitcoin's market cap to the total supply of stablecoins reaches a tipping point. When there is a massive amount of dry powder sitting on exchanges and the supply of Bitcoin available for sale is at record lows, the math is inevitable. It is a supply-demand imbalance that must be resolved through a price explosion. Whales know this. They don't buy when the news is shouting all-time high. They buy when they see the supply shock indicator flashing red on the on-chain data while the price is still sideways. This is the essence of being a data-driven trader. You are not guessing. You're not following a signal bot that reacts to what happened 5 minutes ago. You are looking at the foundational liquidity that dictates what will happen 5 hours or 5 days from now. The problem for most traders is that this data is hidden in complex blockchain explorers or expensive institutional terminals. They get overwhelmed by the sheer volume of information. They see thousands of transactions and can't tell the difference between a routine exchange shuffle and a coordinated accumulation phase. This is why retail consistently loses. They react to the effect, never the cause. In this video, I'm going to show you how to identify the cause. We are going to look at the mechanics of the Stablecoin Supply Ratio, SSR. We will discuss why a low SSR is the ultimate spring for a price bounce. We will explore how smart money uses liquidity pools to hide their entries, and how the lack of available stables on exchanges can actually be a bearish sign, regardless of what the chart looks like. Stop being a victim of the cheap hype you see on social media. It is time to graduate to technical, data-driven intelligence. It is time to look at the market through an X-ray. By the end of this block, you will understand that liquidity precedes price. If you understand the flow of stables, you understand the future of the market. This is the first step in moving from a gambler to a professional analyst who follows the smart money footprint. Now that you understand the theory behind the stablecoin supply shock, let's get into the technical execution and how we actually track this using Radar X-Ray TM. At Crypto X-Ray Labs, we don't believe in manual guesswork. We monitor over 1,000 assets simultaneously to find where the momentum is shifting. When we talk about the Radar X-Ray TM, we are talking about a decision radar. One of the core metrics we look at is unusual volume behavior, paired with momentum shifts. When a stablecoin supply shock is brewing, you will see a very specific pattern on our visualizations. You'll see price volatility compressing, while the internal volume metrics, what we call abnormal activities, start to spike. This is the footprint of a whale entering a position without moving the price. They are absorbing the sell-side liquidity using the massive amount of stables they've moved onto the exchange over the previous 48 hours. Our tool tracks these volatility expansions before they hit the general public scanners. Imagine having a radar that doesn't just show you where the planes are, but shows you where the fuel is being moved to prepare for the next flight. That is Radar X-Ray TM. We look at trend alignment. Is the macro trend of stablecoin issuance growing? If Circle and Tether are printing billions, that is a macro tailwind. But on a micro level, we need to see that money moving into the momentum phase. The Radar X-Ray TM identifies when an asset moves from a stagnation phase to an accumulation phase based on these on-chain flows. We've seen this play out hundreds of times in our community. For example, before the last major Ethereum breakout, our users saw a massive divergence. Price was flat, but the stablecoin to ETH ratio on exchanges was plummeting. The unusual volume indicator on the radar flashed a warning. Those who were using our intelligence didn't just hope it would go up. They had a data-backed conviction that a breakout was the only logical outcome. This removes the emotional weight of trading. You aren't worried about a 2% dip because you can see that the underlying liquidity hasn't left. In fact, you see it increasing. Our momentum shift metric is designed to capture the exact moment when the stablecoin supply shock nerve translates into price action. It asks about trend alignment, making sure your trade is moving in the same direction as the heaviest wallets in the room. This isn't about signals that tell you to buy or sell blindly. It's about providing you with a visualization of market strength. You can see the volatility expansion, starting as a tiny dot on the radar and growing into a full-blown trend. Whether you are trading Bitcoin, Ethereum, or one of the 1,000 mid-cap assets we track, the principle remains the same. You're looking for the imbalance. You're looking for the abnormal activities that signal the start of the breakout. This level of analysis used to be reserved for hedge fund managers with six-figure Bloomberg terminals. Now, through the Radar X-Ray TM, we've democratized this intelligence. We give you the same on-chain vision, presented in a way that allows for fast, decisive action. No more analysis paralysis, no more staring at 20 different indicators that all contradict each other. We focus on what moves the needle: volume, momentum, and liquidity. When these three align, the probability of a successful trade increases exponentially. This is what we mean by decision radar. It guides you through the fog of the market and points you toward the highest probability setups. If you're tired of being chopped up in sideways markets, this is the solution. You need to know where the shock is coming from before the wave hits the shore. We are reaching the end of this deep dive, but this is actually where your journey begins. Understanding the stablecoin supply shock is the foundation, but execution is what separates the winners from the losers in this market. Welcome back to Crypto